It's a Monday, and I'm doing my daily price action journal for gold and GJ. Today I did take a trade. It was a tiny loss of 0.015%, so pretty much a break-even trade in my eyes. Very small loss, and I did take the trade pre-London hours. It was at around 7:40, something around that. Let's have a look. And the idea was I was looking for continued downside to my next key level of 1855. Whereabouts was it? Yeah, I think it was there. Right, okay. Yep. So it was around here. Price was consolidating at these lows, and we did get a closure below this support and a break of this wick to the left here, and I entered a short, and the idea was we'd get continued downside towards the key level as we was consolidating in this area here. Well, we was chopping down throughout Asian session, and there was just ranging between 1860 and 1865, but we did get these closures below these minor supports, and the idea was we'd get a nice impulsive move to the downside at 1855, and then potentially continue the scalps, take positions, and then keep the scalp running if we did get closures and continued bearish market structure below the key levels. We was also getting to a key area of interest there as well. As you can see, I've had noted there for about a few days at least. Safe sells below this higher time frame key level. Higher time frame closures, candle closures below this key level area, and it's also a significant low for gold, which we have had an upside move from. So yeah, the idea was we had closures below these minor supports, and I expected continued downside here. But once we got this engulfing candle, the size of the candle body wasn't the greatest really. Wasn't showing huge bearish momentum, so maybe that was a mistake on my part. But once we got an engulfing candle on this 1 minute, I just took a tiny loss here. I entered quite a small. It was quite a small lot size. I was traveling to work. Obviously, I had eyes on the charts, but I was traveling to work, so I didn't really have time to calculate I didn't have time to calculate a correct stop loss really. It was sort of I just did a quick one, and so when this 1 minute candle closed above, I thought, you know what, I don't like the idea of this. We're not seeing that continued bearish momentum, so I do expect price to maybe come back above this range and start testing these highs up here. So I closed the trade for a tiny loss really. What a tiny loss. But like I said, the lot size wasn't really correct. It probably should have been higher, which would have made the R&R better. Would have been around there. Would have made the R&R higher. So, but it wasn't. So, stop loss could have been around up here for a 1% loss. So yeah, got out of that trade as I was driving. I didn't really want to monitor, ride through any potential consolidations or pushes to these highs here, and as I couldn't monitor the trade as well as I could sat at home, I just thought best to close out. I didn't get the reaction I wanted. I didn't get the continued bearish momentum. and I didn't get the kind of reaction I wanted once price closed below these lows here. So yeah, moving on. Price did eventually get down to these price did eventually get down to these lows here. As you can see, I'll just pause this price action. It's not letting me pause. Oh, we're not pausing to there. It's weird. It seems to have broke. Nasty spike on the 55, 755. Quite weird. Nasty spike. And then we do get that 8 o'clock candle close, and we get a push up, an hourly wick up, and then nice bearish pressure here, and a continued downside move. That would have been the best play from London session in my opinion, but I did get out of the trade at this point. I was driving on the motorway, and I just I left it at that really. I didn't really want to continue trading. I just thought I took my little entry, and if the price would have gone down, happy days. But it was right to close because it would have put me at about a 1% loss with that nasty spike up. Let's see if you can see. You can't see it properly. All right, that wasn't even a wick up; it was the top of the box. But yeah, anyway. So yeah, best entry would have been here, hourly top wick up, and then the closures back below these minor supports here, and then continue downside. Quite slow price action, but you can see a perfect reaction to 1855 here. You could have scaled out some of your entries there. You'd have to have quite a tight stop for it to be for your trade to be worth it really. You'd have to have quite a small stop loss. So let's see how the rest of London plays out. So we did get that reaction to 1855, as we've seen on the 1 minute time frame, and that was the start of a reversal here, pullback, sorry, and then get a continued downside move, couple of wick up to 151, 1851, and then quite small bearish exhaustion candle. First indication that the bearish momentum is starting to weaken here, and then we see minor supports forming and then a strong push to the upside. And as you can see, it closes above the latest, the higher low from which this push down came from, and then it wicks off it nicely on the 15 minute. But we also close below these minor sensitive price areas to the left. Then we just range after this main push to the upside. So yeah, not the cleanest price action on gold at the minute, or on Monday. I think that was due to we have the federal interest rates coming up on Wednesday, so we tend to see quite rangy price action as investors sit on the sidelines before any fundamental news comes out, and then they move accordingly to the news events and the catalysts. So yeah, quite a range of conditions, but a decent downside move on gold throughout Asia, decent volatility, and eventually a failure to hold support, to hold bearish price action below this significant price level. Let's have a look. So yeah, quite strong reaction. Close to this daily support level, and also a failure to continue bearish market structure below 1855. So yeah, what we can see now potentially on gold, we could see a daily wick, that daily wick be filled and continue downside. As we do, we are looking to, we are closing below this daily support area here at 1870, and we could see a daily wick fill tomorrow on gold, and potential pushes to downside and test liquidity at these highs here, from and grab liquidity from the breakout buyers from these highs here at 1837. So we could see price push down to there and test these areas maybe. But if we do see daily closes below 1855, we could see continued downside targeting these lows here at 1815. So in terms of entry points, as we clearly are in corrective bearish market structure at the minute. Gold is struggling to, the corrective phase is struggling to push down really anywhere significantly in comparison to the bullish move we've had on gold. We're not seeing deep pullbacks at the minute. We're seeing a corrective phase which is taking a lot of time to accumulate over, but we are seeing lower lows and lower highs, so technically we are correcting at the minute. What we could see potentially is, if we do, price has rejected off the support here, if we did start holding intraday support above these levels, then we could see a deeper pullback, but obviously we need to be wary of these lows here, and if we was to start forming support, start breaking these lower highs which have given us this impulsive move to the downside, then that would be a sign of the corrective structure being broken and continued upside on gold. Obviously safer buys again above 1912, and just a continued, just a break out of this consolidation slash slight corrective phase on gold, which would signal continued upside to these highs here of 190, 1957 and 1960. So that's what I'm seeing on gold. If you was to get intraday time, was to see a pullback and then engulfing price action, engulfing bearish price action, engulfing this 4-hour support there, we could well see continued downside on gold and down to these lows here, as we marked up on the daily. But we have reacted very nicely to these 4-hour levels, and we've had a nice strong bullish closure here. Maybe we'd have a double bottom scenario through Asian as well, where we could see price failing to close below here on intraday 4-hour time frames, and then support holding above 185 or 182, and then continued pushes up to 1876, and then potentially scale the buys up if we do get bullish market structure continuing above these key levels and areas of interest. However, you would be trading technically a pullback, so it's good to be in and out of the market and during these moves and take your piece of the pie, as we have got sensitive price areas to the left, which could give you that deeper pullback on gold, which you tend to see a lot. So in terms of, well, in fact, let's have a look at GJ now. GJ similar. We're in a corrective phase on GJ at the minute, but we are starting to see closures and higher time frame closures above a psychological level 152 to 1552, which is also the higher low of these impulsive, higher low of this impulsive leg to the downside. So this is a good sign of breaking that corrective structure. See, what I'd like to see now is a breaker of this higher low, which gave this move to the downside, and that for me would signify that we have broken corrective bearish market structure, and we can continue to scale buys up to the highs of 156 on GJ. As you can see, we are sitting around this level now. We haven't closed above it yet, as of yet. We could see price consolidate around this between 1553 and 152. We could see price consolidate above around there, or even push up through Asian. But we have quite a strong upside move from 10 o'clock onwards. Again, we have had a nice move after the 10 a.m. candle has formed, which is usually a low volume time, really, pre-New York hours. But recently, we have been seeing market structure. We have been seeing moves, form at these unusual times, and it's more of a frequent occurrence at the minute. It's happened a few times over the week. Let's have a look now at previous times it's happened. I'll just get my sessions. 10 a.m. candle there. That reverses price action last week on the 9th of June on a Wednesday. There we go again. The day after, we have the 10 a.m. candle reversing price action, reversing from bears to bulls. On the day before, it reversed from bulls to bears. And again today, we've had a reversal of price action at 10 o'clock from bears to bulls. Quite interesting. And I found in the past when I used to do these daily price action journals that you would see similar patterns form like this on not for long, but you'd see them formulate. Price action would give you clues and leave footprints over shorter periods of time, and that's how you get to really know your pair and get to know how price is moving in like more recent and relevant times. Because theoretically 10 a.m. is a poor time over a larger space of time. 10 a.m. candle is a poor time to trade. Like say last year, me and my brother wouldn't even get to 10 o'clock candle with most of the volume will have played out during London session. London Open, 8 o'clock and 9 o'clock, and then after that, really, we're just you go into the gym and doing other stuff and getting on with other things you have to do, and then coming back for pre-New York and New York trading times between 12 and 1 o'clock. But if you was to do that in recent times, you'd be missing some nice moves on GJ. But they have been quite tough because you would be getting intraday 4-hour candles giving you indications of the opposite side of the market, so you'd be pretty confident on upside. Really, you'd have a 10 a.m. candle close above 1552, also above this sensitive price point and resistance here. You'd be pretty confident that if the 10 a.m. candle gave you that pullback to 155 200, you'd be probably looking to take buys and continue the upside. Going off this 4-hour intraday candle. But yeah, quite unusual price action we have been getting. Reversal moves on the 10 a.m. candle, so let's keep a close eye on that and see if it happens again. It's quite interesting. See, I'm just going to try and find any more times this has happened. There we go. 10 a.m. candle again. The hourly candle and the 10 a.m. candle again here on the 20th of May is the best time to enter. then you would experience very minimal drawdown on this upside trade. Quite aggressive, but price respects these lows, and you could take buys at that point to candle body closures on these highs here. Another example. Here we go again. 10 AM candle. Reversal. To the highs. Liquidity grab from highs again. Entering after the 10 AM candle hourly closure. So 10 AM reversal. Yep, it is. There's another. It's not exactly a reversal, but it's the start of a move. 10 AM candle. Candle. Interesting. So yeah, we have seen at least through parts of May and quite more frequently during June, we have been seeing 10 AM candle being quite important in terms of price action, reversals in price. So something to keep an eye on. In terms of trade ideas, the idea is I see safer buys at 155, 200 above there. Obviously looking at watching price at these sensitive price areas to the left and the highs of this leg down, this push down. So let's just make this look more simpler. So obviously we're having this corrective structure on GJ at the minute. Now notice how price pushed up at that strong impulsive move to the upside, but we failed to break the lower high. So we're still in that corrective phase at the moment. Then price pushes down here. We failed to even test these lows again. We've had this double bottom scenario, and now we are pushing up, and we are now getting above these recent highs, these recent lower highs. We're starting to get above these recent lower highs. So what I'd like to see now is intraday closures above this level, whether that be 4 hour, 5 hour, not 5 hour, the 4 hour in the daily candle. And then if we've got a nice daily candle pullback to this 155, 200 area, and also a previous level of resistance and new support, and then I'd watch 1 minute price action accordingly at this psychological level. Look for signs of exhaustion, and then a reversal, a pullback. So then we'd scale buys up to 155, 500. Get nice candle bullish price action above this sensitive price area, and then obviously if we do get the confirms, then hold the trade above 155, 500 and target the highs to the left of 155, 800 and scale accordingly if the price actions lets us. If not, and we do fail again, we do get strong reactions to this level, and then we start seeing rejections of these highs, signs that look, we're not ready to break out of this bearish market structure, and we are still in a corrective phase, and we are ranging at that point. And I do see a strong rejection of this high here, and then bearish market structure retest bearish market structure forming at below 155,200, then there is possibilities we could sell GJ down to each psychological level and then manage to trade accordingly. But bearing in mind, we do have sensitive price areas to the left, which price could react to quite easily. So it's best to be in and out of the market, especially with the counter trend scenario. Best to be in and out of the market. So yeah, that's what I see on GJ. I'm just looking back at other corrective phases on GJ now. I'm just trying to look for any clues of GJ. I'm just looking at corrective phases on GJ, and then we'll look at the clues it gives of these corrective phases being reversing and then the bullish uptrend continuing, really. This one's a good one. So obviously we get uptrend, and then we get our break of the higher low, which gave this leg up. We get a break of it, price tries pushing back above it again, breaks it fully, and then we get a rejection of it. We get a break and retest of it, as you can see on point there. Break and retest, continued downside, continued bearish market structure, and then we get a pullback, retest, a break and retest, but obviously it fails to close below these low and carry on the expansion down at this point. Obviously with GJ being very bullish, it doesn't buyers enter the market here. It doesn't need another entry point, it doesn't need to consolidate more or bounce up and down. It just breaks the high at this point, and then once we break the higher low, the lower high here, once we break the lower high and form support above it, nice push to the upside, and then this is the next target, the next lower high. We start closing above it, forming support. Failures to close below it once it's broken, failures to close below, bears are losing momentum, and then the bulls are in control. Off we go, push above, and then we get to these highs here, close above them on intraday time frames, daily time frames. Then we get that daily pullback, daily and weekly candle wick. Perfect reaction to one of the lower highs of the bearish market structure. Closes above, higher highs being printed, higher lows, higher highs, higher lows, higher highs. Obviously you know the score. No reason to sell GJ. Wait for the pullback and ride the buys up. But it's good to see, just reminding yourself and just being more familiar with just basic market structure and just looking at how the reversals played, why they played out. It's because these lower highs were broken and the switch in market structure happened. So even here, corrective market structure. And then failure to break significantly lower from these lows, don't get that push down, price engulfs it back into this range here, and we get the push up, closes below the high, pull back, quite messy price action, fails to reach these lows though, push up, closes above here, retest of it on the hourly time frame, perfect retest of it, you're going to be able to catch that in the 1 minute, up it goes, push, 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 failure to close above this higher low here, this higher high, sorry, lower high, fucking hell, failure to close above here, then we get that strong push down, back under this range, back under these highs here, a retest, failure to close above it again, pushes down, this meaning that the corrective phase is still in control, the birds are still in control, bullish upside move wasn't ready yet, but even though you could still catch a very nice trade up to these highs, even if you don't have to catch the full reversal of the trend, you can just catch the bullish impulsive move to the upside, you can still catch that with your scalping as well. Doesn't mean you have to ride buys all the way up to these highs. Obviously you would expect the price to do that, but this time it doesn't. The bulls aren't ready, and the corrective phase continues, but there's still buys to be had once you get these closures above these lower highs. So anyway, price pushes down again, so obviously price is just ranging at this point, and then we get to these lows, failures to have significant price, significant pushes below these lows here, and then we start seeing the exhaustion, liquidity gathering, and then choppy price action, above. We get above these highs, don't even retest it, just consolidate above it, get impulsive buys above these lower highs, breaks, consolidates, fails to even pull back deeper because the bullish momentum bulls are clearly in control, pushes up to this high here, forms support above it, strong impulsive move to the upside, which does get nastily corrected during New York, but again, you still get that impulsive upside move, you get 30 pips from it, so if you're in and out of the market, you still get a winning trade here, as you do see price respecting this higher and failing to close back below it at that point, you can still get that bullish upside move, and then you get closures below, retests, and you get signs that GJ needs that deeper pullback to continue its upside. And then you just get a higher time frame consolidation. But as price is consolidating here, we're starting to see bullish uptrend in that consolidation. Price chopping up, printing higher lows, and then once you get the hourly closures above the high here at 154, 152, 400, 500, once you get them candle body closures above, you get that strong impulsive move to the upside. As we all know, when price consolidates for large amounts of times, you get that, once they do break, you get that strong push to the upside. So in between these consolidations, there's just a reminder to myself that when price is consolidating after printing new highs, doesn't mean that there's going to be a reversal. It just means price is consolidating and gathering liquidity before its next move, which have always been catalytic moves. I don't even know if that's a word, catalytic, but they've all been the price of GJ just tends to print highs, print new highs, consolidate, and then print new highs again. That was coming out of lockdown news, priced in over the weekend. and you had that strong upside move throughout Asian. And then price consolidated again, quite nasty price action, and then strong impulsive move after we had positive. What was it? Trying to think what it was. Brain's gone dead. But yeah, again, it was positive news for the pound, and we got that strong upside move again. So now we're just getting that corrective first, but maybe we'll start to see a continued upside move. Now we're starting to break these highs here, but quite messy price action on GJ really. But I would be open to taking buys if we got a daily pullback to 155-200, and then continue the buys if we were to get enough volume and liquidity, bullish liquidity, push above these highs there would give me would give GJ a good chance of reaching 155-500 and beyond if the volume's there and price confirms. We'll look at Japanese yen currency index. As you can see, we are quite bearish on the. We are quite bearish on Japanese yen currency index in a minute, and you would expect price to test these lows here and then go on to test these lows of March 2021 if he was to break these lows from the 3rd of June. But we are in bearish market structure on JPY at the minute. In terms of DXY, we are getting price react to. We are seeing maybe a double bottom start to form at these lows. So maybe we'd get a bit of short-term US dollar strength and pushes up to these highs there, as we can see price consolidate on the US dollar, or we could just get continued weakness in the dollar, and once these lows are breaking at $89, we just continued downside move. But we'll have to keep an eye on that fundamentally. But we are starting to see signs of bearish exhaustion on USD currency index, or we are just seeing a DXY just consolidating before its next impulsive move to the downside. Maybe the federal interest rate news on for the US dollar will give that catalytic move to the upside or downside on USD, which would affect obviously all USD pairs, including gold. So probably going to see consolidated markets on all USD pairs until we do get that Fed interest rate news and all the Fed speakers speaking, and we'll get more of an outlook of the US dollars, more of a fundamental outlook on the US dollar going forward, and we'd see that some the investors step off the sideline and start putting the money into the markets and picking the winning side. So that's everything, and that's everything for today. And I'll be doing another one tomorrow.